I think everybody here knows me, but for anybody who doesn't, my name's Cam. I'm one of the, my wife and I were the owners of Auxilium, and our team is all here as well. So we try to take a lot of care and try to provide those services. And tonight's an example of that. I figured, there's so much confusion about mortgages. You hear about all these rule changes, what's going on. So I thought it'd be a really good opportunity to kind of go over a few different things tonight. So today we're going to just talk about the recent changes to mortgages, the rules, what's happening. We're going to talk about a mortgage that can actually help pay some money back to you. We're also going to talk about stopping cash flow crunch for any clients or anybody you might know that wants to do a refinance. If you know anybody getting divorced, there's certainly mortgage options out there in that situation that can assist. And it's really good for realtors, for example, who are trying to deal with a property and you've got two couples going two different ways. Building a rental portfolio. I get asked a lot from people, hey, could I buy another rental property or could I buy one rental property? And it's a lot of confusion about the rules around that as well. So let's begin. We'll just talk about some of the recent changes that have happened. Now, a lot of people aren't aware, but the government, and there was a lot of talk about it, they introduced what's called a stress test for mortgages. So if you've got a house that you want to purchase and you're putting less than 20% down, you have to qualify on the Canadian benchmark rate. It's essentially a rate of 4.64%. That doesn't mean that's the rate you get, but that's the rate you have to meet. And a lot of people are having a bit of a challenge pre this happening. Basically what we found is that when this rule kicked in, it took the buying power out by about 20%. That was the effective change by bringing this new rule out. The amortization for a high ratio mortgage, that's a mortgage where there's less than 20% down, it can exceed 25 years. So couple that with a 4.64, it makes challenging a little bit interesting. Now that's not to say that people aren't getting qualified, they certainly are, but it is definitely playing into it. And also it's really fundamental for people to get into a property that has a rental unit, so that's why so many people now are seeking properties with rental units as well. So that's made a big difference. Actual mortgage rates are record low. Got variable rates under 2% right now in some cases. However, another thing that people fail to sometimes realize, and again, this is an industry we're in and we see it all the time, there's two classes of rates now that are out there. One is for people that are putting less than 20% down, and one are that are putting more than 20% down. Traditionally, people with more than 20% down used to get better rates. Not the case anymore. If you put less than 20% down, you get better rates now. So if your mortgage is backed by the government, it's CMHC or Genworth or Canada Guarantee, those are the three insurers. If it's insured by any of those folks, you now get preferred rates. And the primary reason for that is it takes a lot of the risk off the lender. For that reason, they're basically offering people really low rates. And when you do have rates under 2% for variable mortgages, it's pretty crazy. Plus, the other advantage of that low rate has been that almost, in some cases, I just had a client recently, 65% of every payment dollar is going to principal. In the old days, you were lucky to have 5 or 10% go to principal. So that's been a big fundamental shift. Okay. The other thing, affordability, obviously we know, we got a couple of realtors in the room, we know it's a significant factor. Prices have certainly escalated a lot. However, that's again back to houses with suites. They seem to be selling really quick. Yep.
I was just going to ask, so that 65% figure that you quoted, that was based on the variable rate?
Yeah,
okay.
Yeah. Even on the fixed rates, we're getting in the neighborhood of 55 to 60%.
And that's right off the bat, or
right off the bat? Okay. So one of the things we hear a lot about is the housing bubble, and they talk about it a fair amount. And essentially, what that simply means is that prices go up so much that eventually they're going to implode and the prices are going to start faltering. They've been saying that's going to happen in Vancouver for an awful long time. So far, it seems like it's been relatively stable. Recently, you've had news that in Toronto, prices are starting to weaken a bit, primarily due to the fact there's more inventory coming onto the market, and there's been a lot of bidding wars that we hear about in Victoria, we hear about in different markets. More inventory obviously will result in that probably changing a bit. And one of the primary driving factors for us, I know in our real estate market, is there's just no inventory out there. You hear that from realtors all the time. There's nothing for people to choose for, so there's a lot of pent-up demand. We'll see how it all plays out, but again, we've got folks that are able to qualify, rates are amazing, so certainly great opportunities.